You think you know yourself. You believe you understand what makes you tick, what keeps you up at night, what drives your decisions. But there's a mirror that reveals your deepest psychological truths with surgical precision. A window into your soul that most people never realize they're looking through. Your investment portfolio. Your stock picks expose your fears. Your bond allocation screams your insecurities. Your cash holdings whisper your childhood traumas. Your crypto positions shout your desperate need for validation or your reckless disregard for consequences. Every financial decision you make is a psychological fingerprint, a DNA sample of your emotional core. But here's the plot twist that'll make your head spin. What you think is rational financial planning is actually your subconscious mind playing puppet master with your money. That conservative portfolio you're so proud of, it might be revealing a crippling fear of loss that's sabotaging your future. That aggressive growth strategy you've adopted could be masking deep-seated inadequacy issues that are driving you toward financial suicide. The conservative fortress builder reveals the mind of someone who's been burned before or watched others get burned. You're the type who remembers every market crash story your parents told at dinner, every cautionary tale about Uncle Bob who lost everything in tech stocks. Your brain has constructed an elaborate defense system where slow and steady doesn't just win the race, it prevents emotional apocalypse. Studies suggest that ultra-conservative investors often experienced financial trauma early in life, creating neural pathways that associate risk with genuine physical danger. Your amygdala fires the same warning signals when considering growth stocks as it would if a tiger walked into the room. This isn't weakness, it's survival programming gone haywire. But here's the brutal truth that nobody wants to tell you. Your fortress is also your prison. While you're protecting yourself from potential losses, you're guaranteeing yourself real ones through inflation and opportunity cost. Research from behavioral finance experts indicates that overly conservative investors lose more wealth over decades than moderate risk takers lose in market crashes. Your safety is an illusion built on mathematical quicksand. Like a gambler at a Vegas table, the aggressive growth chaser operates on pure emotional cocaine. You see red portfolios and green portfolios, winners and losers, and somewhere in your reptilian brain, you've decided that fortune favors the bold. Every high-risk investment becomes a personal challenge, a test of your worthiness, a chance to prove you're not like all those scared little sheep who settle for index funds. But what you're really revealing is a psychological profile that researchers have studied extensively. Aggressive investors often display traits linked to sensation-seeking, overconfidence bias, and what psychologists call illusion of control. You believe you can time markets, pick winners, and outsmart algorithms designed by teams of PhDs. Meta-analyses of investor behavior show that the most aggressive individual investors underperform the market by an average of 6 to 8% annually, not because they're stupid but because they're human. Your brain is literally working against you. The same dopamine pathways that make you feel invincible after a big win are the ones that make you double down after devastating losses. You're not investing, you're self-medicating with volatility. The diversification evangelist represents the golden middle, the supposed voice of reason in a world of financial extremes. You've read the books, studied the charts, and constructed a portfolio that looks like it was designed by a committee of Nobel Prize winners. Stocks, bonds, REITs, commodities, international exposure, domestic growth, value plays. You've got more asset classes than a textbook example. You sleep well at night knowing you're protected against every possible market scenario. But here's what your diversification obsession really reveals about your psychological makeup. You're paralyzed by analysis. You can't make definitive choices because making choices means accepting responsibility for outcomes. Diversification becomes your emotional security blanket, allowing you to avoid confronting your real risk tolerance. Studies in behavioral economics show that over-diversification often stems from decision paralysis and fear of regret. You'd rather be mediocre across everything than excellent at something and wrong about it. Your portfolio isn't optimized, it's democratized. Every investment gets a participation trophy. And while this protects you from catastrophic failure, it also insulates you from exceptional success. Your risk tolerance isn't moderate, it's non-existent, disguised as sophistication. The follow-the-crowd momentum chaser embodies humanity's most primitive herding instincts. When everyone's buying Tesla, you buy Tesla. When crypto explodes, you're right there with your credit card ready. Your investment strategy is financial peer pressure, revealing a terror of being left behind. Research shows momentum investors are driven by evolutionary herding behavior, where your brain interprets financial isolation as existential threat. Studies demonstrate that momentum chasers consistently buy at peaks and sell at troughs because they're responding to social cues rather than financial fundamentals. Your portfolio becomes collective madness rather than individual wisdom. The do-nothing procrastinator represents analysis paralysis taken to destructive extremes. You understand compound interest intellectually, but your money sits earning nothing while you research the perfect strategy. What you're revealing is perfectionist tendencies, where you'd rather make no decision than a suboptimal one. This protects your ego but destroys your financial future through inaction. The panic seller represents the rawest form of emotional investing, where fear overrides every rational thought process. You buy during bull markets, feeling confident and sophisticated. But the moment red numbers appear on your screen, you transform into a financial flight risk. Your sell button becomes a panic button, and every market dip feels like a personal attack on your financial survival. What this reveals about your psychology is fascinating and heartbreaking. You're operating from a trauma response where short-term pain feels more dangerous than long-term loss. Studies in neuroscience show that loss aversion in investing activates the same brain regions associated with physical pain. When your portfolio drops, you're not just losing money, you're experiencing genuine suffering. And like any suffering organism, you'll do anything to make it stop, even if stopping the pain causes greater damage. Research indicates that panic sellers often came from financially unstable backgrounds where money represented safety and security rather than growth opportunity. Your investment behavior isn't irrational, it's protective based on survival instincts that served you in childhood but sabotage you in markets. Here's the science that ties it all together. Your risk tolerance isn't really about money. It's about your relationship with uncertainty, control, and fear. Neuroimaging studies show that when people make investment decisions, different brain regions activate based on their psychological profiles. Conservative investors show increased activity in areas associated with threat detection. Aggressive investors display patterns similar to addiction responses. Every investment choice you make is filtered through your personal history, your traumas, your victories, your deepest insecurities, and grandest ambitions. But there's another layer to this psychological maze that most people never consider. The FOMO crypto cultist represents a unique breed of modern investor whose risk tolerance has been hijacked by social media algorithms and get-rich-quick fantasies. You scroll through TikTok and Instagram, watching 20-year-olds flash Lamborghinis bought with Dogecoin profits, and something primal awakens in your brain. This isn't just momentum investing. This is digital age gold rush mentality mixed with casino psychology and sprinkled with tech bro mythology. Research shows that crypto investors display unique psychological patterns that combine gambling addiction tendencies with technological optimism bias. You're not just buying digital assets, you're buying into a narrative that says you're smarter than traditional finance, more forward-thinking than your boomer relatives, more deserving of wealth, because you understand the future. But what you're really revealing is a desperate need to escape your current circumstances through magical thinking. Studies indicate that heavy crypto investors often come from middle-class backgrounds where traditional wealth building feels impossibly slow. Your risk tolerance isn't high. It's broken, replaced by a lottery ticket mentality disguised as financial innovation. The market timing oracle believes they've cracked the code that trillion-dollar hedge funds haven't figured out. You study charts like a palm reader. Studies hands seeing patterns where others see noise, predicting futures where others see randomness. You've convinced yourself that you can outsmart markets through technical analysis, economic indicators, and gut feelings that you've elevated to mystical status. What this reveals about your psychology is both fascinating and tragic. You suffer from what researchers call hindsight bias combined with confirmation bias on steroids. Your brain retroactively creates patterns in past market movements, then projects those patterns into the future with religious certainty. Studies of market timing attempts show that even professional fund managers fail to consistently time markets, yet individual investors persist in believing they possess supernatural market powers. You're not revealing high risk tolerance. You're revealing a fundamental inability to accept that some things are unknowable, that uncertainty is the only certainty, that markets are complex adaptive systems that make lottery drawings look predictable. Understanding your psychological profile doesn't mean accepting it as permanent. Awareness creates choice. If you recognize yourself as a panic seller, you can implement systems that remove emotion from your decisions. If you're an aggressive risk chaser, you can channel that energy into calculated strategies rather than gambling. If you're paralyzed by options, you can simplify your approach and automate your investing. If you're caught in crypto FOMO cycles, you can allocate small percentages to speculative investments while building solid foundations elsewhere. Your risk tolerance can evolve, but only if you first acknowledge what's driving your current behavior and understand that your brain is simultaneously your greatest asset and your biggest enemy in building wealth. But here's where it gets even more twisted. Your risk tolerance doesn't just reveal your psychology, it actively shapes your reality through a phenomenon researchers call behavioral cascading. The ESG virtue signaler invests in clean energy and sustainable funds because your portfolio becomes an extension of your personal brand. You're buying moral superiority over primitive oil company investors. Studies suggest ESG investors display higher moral reasoning but also higher susceptibility to greenwashing. Your risk tolerance becomes secondary to ethical consistency, accepting lower returns for better sleep. Sometimes virtue becomes vanity. The day trading addiction chaser treats the stock market like a dopamine video game where self-worth is measured in daily profit and loss. Research shows frequent traders display brain patterns nearly identical to gambling addicts. Every trade becomes a neurochemical hit. You're not building wealth, you're feeding an addiction that systematically destroys your financial future. The index fund purist represents the intellectual extreme of evidence-based investing taken to religious proportions. You've read every academic paper on efficient market hypothesis, memorized the studies showing that passive investing outperforms active management, and constructed a portfolio so mathematically optimized it could be featured in finance textbooks. But what your index fund obsession really reveals is a deep psychological need for intellectual superiority combined with a fear of individual responsibility. You've outsourced your investment decisions to academic research because making personal choices feels too risky, too emotional, too human. Studies show that extreme passive investors often display perfectionist tendencies and analysis paralysis disguised as rational decision-making. Your risk tolerance isn't evidence-based, it's abdication wrapped in academic credibility. You'd rather be perfectly average than risk being imperfectly exceptional. The crypto-maximalist zealot takes speculative investing to cult-like extremes, where risk tolerance becomes religious conviction. You don't just own Bitcoin, Bitcoin owns your identity. You've convinced yourself that traditional finance is a scam, that governments are obsolete, that blockchain technology will revolutionize everything from grocery shopping to space travel. Your investment thesis isn't based on financial analysis, it's based on apocalyptic prophecy where you're either going to be vindicated as a visionary or vindicated as a martyr. Research shows that extreme cryptocurrency investors often display traits associated with conspiracy thinking and anti-establishment sentiment. Your risk tolerance isn't high. It's ideological, driven by a psychological need to be part of a revolutionary movement rather than rational assessment of probability and outcomes. Remember, this is purely educational content and doesn't replace professional financial advice. Your investment decisions should always consider your individual circumstances and goals. The goal isn't to shame your psychological tendencies but to understand them so you can work with your brain rather than against it. Every investor exists on a spectrum of these psychological profiles, and recognizing your dominant patterns is the first step toward making decisions based on logic rather than emotion. So what does your portfolio really say about you? Are you building wealth or managing trauma? Are you investing in your future or protecting your past? Which psychological profile resonated most with your own behavior? Drop a comment below and let's decode your financial psychology together. And if this video made you think twice about your investment strategy, hit that like button, subscribe for more mind-bending financial insights, and share this with someone who needs to see their portfolio as the psychological mirror it really is. Because understanding yourself is the first step to building real wealth, and your money decisions reveal more about who you are than any personality test ever could.